Now we have our first panel conversation, and it's led by the incredible and talented Polina Hanin of Aequitas Partners. The inspiration from this showcase came from events that Polina put on during her time at Startup Health to connect founders to a variety of partners that could help them grow. We all want to thank Polina for graciously also serving as our advisor on how to set up today's showcase and create connections for our community. So thank you, Polina, for all you do to support leadership and women's health. And over to you, please, to share more about your incredible background and introduce this exciting panel of rockstar VCs.
Thank you so much, Susan, and thank you everyone at HitLab for welcoming all of us to this conversation. It's such an incredible event to be a part of, and also just really encouraging to see so much innovation happen within this very, very important market. So really quickly, my name is Polina. I'm principal at Aequitas Partners, which built up leadership teams for high growth health tech companies. So we work with companies like everyone who is part of today's showcase to help build up the leadership teams that will ultimately help the founders get to achieve the really big goals and moonshots that they're all striving for. With today's panel, we're really going to be focusing on the investment piece, and we have some fantastic investors who I'm going to let them introduce themselves. I'm going to give them half the time that all the entrepreneurs have today, so I'm going to see if they can do it. And what we'll ask you all to do is just introduce your fund, how you guys typically invest in the average deal size and stage of your investments, and share with today's attendees how many investments you've made in women's health and why you're excited about this market. So we'll start with Pam, then Casey, Ryan, and Ella.
All right, thank you. Great to be here, everybody. Thanks for the time. Pam Walton, Vice President with the Blue Venture Fund. So the Blue Venture Fund is a collaboration of 35 different Blue Cross Blue Shield plans and entities to come together to make investment in innovation in the market. So really, we think about improving lives and improving healthcare, and doing that with the lens of the health plans. And the Blues represent and insure a third of Americans, and so have great reach and scale and to be able to make that impact. From an investment standpoint, we are stage agnostic. So we've seeded and founded companies all the way through growth stage investments. And check sizes really just depend on where the business is at and the capital needs, and have ranged from $1 million to 20 million, just kind of depending. As far as women's health investments, so there's two that we have that are kind of squarely what you would think of as primarily in women's health. The first is Quilted Health, which is a company that we co-founded in the maternity space. So providing all of the services and technology around maternity care. As soon as you find out that you're pregnant, all the way till the baby is here, and some care after that. And then also Origin, which is a women's health platform that offers pelvic floor PT, which Casey will talk on as well, since we're co-invested there. And then, there, as I think we'll probably talk about in the panel and trends, but women's health as a topic can be problematically, because it's really health. I mean, think about that TAM that we heard about. And so many of our other companies, I think, are making an impact in this way, but those are two that I wanted to highlight.
Thanks, Pam. Casey, over to you.
Yeah, that's great. So my name is Casey Santiago. Hello, everybody. I am managing director at Founders Factory New York. And we make pre-seed and seed stage investments, typically in the consumer and digital health space, with a strong interest and focus in women's health, and we define that very broadly. In addition to the capital that we give, we also have a pretty deep functional team of experts who lean in and help our investments accelerate their growth after our investment in them. And we also have some strategic partners that we bring to the table and look for some good, win-win partnerships between startups and corporates I am also a venture partner at Steel Sky, which is a fund that invests a little bit later on, Series A, B plus, and focuses specifically on women's health. I was an entrepreneur and had my own maternal health company that I grew and scaled and was acquired. And I'm so very proud of the impact that we made, both on the pregnant women that we served, the neonates that we served, and the providers that we were able to help support. Origin is one company. Pam mentioned it. It's such a privilege and an honor to co-invest with Pam and the Blue Fund. Another one I will mention is Remedy, which actually focuses on digestive health. And I call it a, like so many companies, I would say it's a women's health company. If you look at who is purchasing their products, it's overwhelmingly women. We may not think about digestive health company as a women's health company, but if you look at who needs the products and services and who's supporting the, pretty incredible growth path of this company, it's women. So I will stop there and pass it on to the next person. And thank you all for having us here.
I'm next. First of all, thanks to HitLab. Thanks, Susan, for making all of this happen, and team. And thanks to all of you, my co-panelists, for having me. It's definitely an honor and a privilege, to say the very least. Just quickly by way of background, before I jump into what I do, a little bit about me. I'm a first-generation American from Texas. Multicultural family, that's a big part of my identity and kind of what motivates me every day. My mom is Mexican and my dad is from Pakistan. So fun fact about me, I started my career in finance, but my grandparents were farm workers and laborers. So I decided to marry my interest in business with, the community that I'm from and that I hope to serve. So that's brought me to the field of social enterprise and impact investing, where I've spent the bulk of my career. I'm currently a vice president at Citi's $200 million impact fund, where I lead our investments in health. Previously, I managed new market entry and program implementation for Zipline International, a $3 billion robotics company that was at the time focused on improving access to blood and reducing maternal mortality in a couple of countries in Africa. Citi Impact Fund generally is a commercial first impact investor. We are a double bottom line investment team, and we write checks of $1 to $10 million. Like Pam, we are stage agnostic. We've made our first few health investments and have some exciting portfolio companies to announce in the coming quarters. We have yet to make a women's health investment, but I am laser focused on it, and I'm definitely here to learn more from all of my fellow co-panelists, as well as some of you entrepreneurs today, about how we can be additive investors in the space. So looking forward to learning and hearing more.
Okay, I'll wrap up the introductions. Pleasure to meet all of you. I'm Ella Seitz. I'm a partner at Esplanade Ventures. We're a digital health venture capital fund. We're based out of Canada, but we invest globally. We typically invest in late seed through Series A, although we bleed over to some Series B. Initial check size anywhere from $500,000 to $3 million. In terms of investments in women's health, we have been focused on the area. We probably also define it broadly, similarly to Pam and Casey. We're in the process of seeding a maternal and pediatric health company. It's still in stealth mode, so I'll have to not have the big reveal, but it's looking to launch later this month, so we're very excited. And our partnership is really laser focused as well on helping advance women's health, and it's a key area of focus for us for our second fund, which we are also launching late this summer.
Awesome. Well, thank you so much for those introductions. And I think it goes to show how varied the investor space is as well, particularly with some of the perspectives that you all have on where you invest, the types of business models and the types of businesses. So one of the things that I think we hear pretty frequently is how big the total addressable market is, but how few investments there actually are in women's health. And there's various perspectives on all of that as to why that is. But I'm gonna put some of you on the spot, and feel free to jump in on the conversation as well. Maybe starting off with Casey and Pam, why do you think that investors have traditionally been a little bit reticent or bearish on investing in women's health to date?
I'll jump in. So, you know, I think there's the common adage, right, that investors, it's been a very male-dominated field, and there's just something different when you know about an innovation and the impact that it would have personally or for people that you have in your lives. And so when the investor community looked very homogeneous and male, that you know is definitely part of it. I also think our society has a lot of work to do on normalizing talking about issues. For my whole life, I think it's been very common to talk about Viagra and Cialis, and let's make sure that that's working properly, where, you know, things for women are like still very taboo and uncomfortable. So even having you know, when we were working on the process with Origin and pelvic floor health, like it just wasn't something that our investors were automatically familiar with, and a lot of times, and it can be an uncomfortable topic to just dig into on how these things work. And so I'm anything I see that's kind of normalizing, you know, breastfeeding and women's bodies looking differently and how this all works. Like I think it's all helping move things to be more progressive and will make things easier to have these conversations.
Yeah, absolutely. I think that's such a big part of it, Pam. Just sort of stigma around the our bodies. I would also add, you know, if you don't experience something or you aren't familiar with a particular pain point as an investor, you could miss an opportunity. So for example, if you are the 1 in 3 women, you know, who will experience incontinence in their lives, when a company like Origin comes across your desk that offers physical therapy, or when a company like Privy, which is like a non-invasive product that prevents leaks, comes across your desk, you understand instinctively that there's an opportunity, a market opportunity and an unmet need. If you have a different life experience, you may not recognize at all that there's a there. So I think, you know, having lived the experience is pretty critical. I will also say that, you know, still I am talking very frequently with entrepreneurs who have been asked, you know, if they're pregnant, are they planning on getting pregnant? If they're married, these are still questions that women are being asked when they're fundraising. And so that continues to be a challenge. That subconscious bias continues to be a challenge. And in my experience, the most effective people at getting jobs done are people who are pregnant or people who are moms, because you have a lot of other things on your plate. So I think, you know, all of those are part of it, but I think that we're going the right direction.
Throwing this over to Ella, because you guys have made a number of investments in the women's health space. How would you coach entrepreneurs, regardless of whether they are there are women entrepreneurs or those that are developing a technology that doesn't impact the person that they're directly impact the person that they're pitching to? How would you recommend that somebody frame that lived experience to make sure that the investment is going to be interesting enough for that investor to dig into? Or do you just need to find somebody who is going to be directly aligned?
Yeah, it's a good question. I mean, I think it's a little bit of both. I think to your first perspective, like you're not always going to have necessarily women at the table. Unfortunately, there are still very few women in VC. It's great to have more of us here, and we're growing, but it's a starting point. I think that the data is really helpful. Brittany did a great job of summarizing. There's lots of data talking about the market, and I think, you know, showcasing the TAM and explaining some of the kind of context of the opportunity is important. That's been essentially what was really helpful with our partners. It's not that they were not necessarily open to women's health investment. There were just less deals in the space. They knew about it less. And many of us tend to focus in areas that we understand because it's easier to kind of get the problem, get the solution, and kind of get behind the thesis. So you need to break it down in a way that others can relate. And many of the male investors in the room have wives, have daughters, have mothers. So there is a way to make it very relatable, and I have found that to be effective. I think the other point is finding champions, right? Because at the end of the day, especially early on, finding people who really believe in your idea and can help you kind of drive and craft the story and craft the narrative is important. And not every fund is going to be open to that. And so finding where, you have that kind of click, and then building from there as you syndicate your deal.
Ryan, I'm gonna put you on the spot as the resident male in the room who's interested in getting into women's health. How have you had these conversations internally with some of the naysayers, or maybe how have you been a champion for underfounded, underrepresented founders?
Yeah, it's an amazing question. And, I think to start off, I'll start by saying, the open secret in the venture capital community is that there's a lot of herd mentality and copycatting, I think, to some extent. So everyone kind of imagines VCs as being these, risk-taking entrepreneurs and so forth, but there's a lot of not that in the community. And so that generally means that brilliant ideas and perfectly brilliant founders are often left on the sidelines. And so, when we think about what we do from an impact fund perspective, we're deliberately focused on opportunities and undercapitalized founders and overlooked markets. And so that's kind of the role that we're hoping to play more of. The term impact investing can generally mean a lot of things. It's kind of an unhelpful term at this point. But yeah, we're laser focused. We're trying to drive more of our capital to areas that, frankly, a lot of VCs are too uncomfortable to invest in and to due diligence. So, we think about women's health to some extent in that category, but within women's health, we're looking at not just innovations that are targeting the affluent and the connected, but more so even focus on innovation that it's targeting underserved and vulnerable patient populations as well. So, immigrant populations, diverse patient populations, low to moderate income, Medicaid eligible, and the like.
Yeah, I actually want to stay on that notion of the impact fund for a moment, because I think that there's a lot of large organizations that are creating impact funds, or maybe a lot of funds that are creating sidecar impact funds. And sometimes you'll have women's health be a part of that. Do you, and Ryan, throwing this out to you first, but would love to hear others' perspectives on this as well. Do you think that we'll get to a point at some point where these aren't going to be carve-outs, and that impact on a consumer or a particular population is just going to be part of a fund's overall strategy?
Yeah, I definitely think so. I've been bullish on and excited about impact investing for a really long time. And I think part of the reason why impact investing and impact is such an unhelpful term is because so many people are using it to mean so many different things. And so I think to some extent, while that can be frustrating and confusing for the market, it's actually an indication that it's gaining traction. And impact investing is not just a sidecar or a carve out, like you mentioned, but increasingly becoming part of the norm of investing overall. And I'm hoping that we're going to begin to see a lot more. I think, Citi as an example, big financial institution, often slow, like a lot of these financial institutions can be, but we're kind of leading the way to some extent and creating a first of its kind impact investing group within our organization. And I would love to see this being the first of many among some of our larger financial institution peers.
Well, Pam and Casey, it actually seems like some of the partners within your funds are thinking in this exact way of funding innovation that goes beyond their traditional day-to-day business, so particularly with some of the LPs that you guys have as well, right?
Yeah, absolutely. I think health plans maybe have a bad reputation in a lot of ways when it comes to the patient experience and the member experience. But when you really dig in and understand how complex our healthcare system is, and where where the incentives lie and how complex it is, like my experience has always been about things that improve the experience and improve outcomes actually do lower costs. And so I never feel conflicted, like, oh, hey, this is going to cut a bunch of costs but it really will stink for the person on the other end. That's honestly never come up and been a real thing to grapple with in my time here, which because our system has so much room for improvement, you really can do all those things at the same time.
Yeah, and I would say there's a great convergence happening right now among, or across the ecosystem players, whether it's, consumer, retail, insurance. There are a lot of incentives ideally that are being aligned in getting, better healthcare experiences that lead to better outcomes. I think a critical piece of it is to what Ryan said is let's make sure that these, innovations that can have positive clinical outcomes are scaled equitably.
So staying on that notion of convergence, because I think that there's also a convergence of business models, particularly in the way in which a lot of entrepreneurs are approaching in this space. I'm throwing this out, Casey, because you mentioned it to you, but also Ella to you as well. What's your perspective on direct-to-consumer business models versus B2B or B2B2C business models, particularly as it relates to women's health? What have you seen work well? Ella, maybe start off with you first, and then Casey, go to you.
It's interesting. I think it really depends on the business. And so we've seen companies be really successful with B2C, but it's harder to scale at first. And so building that momentum versus B2B to C or B2B, I think it really depends. I don't have a strong perspective on it. I do think that, to some extent, social media and all of the digital channels that you can enact today are getting quite busy, but you can start in a way that could be grassroots. We tend to focus on companies that are a little bit less on the B2C and a little bit more on the B2B, just because it's easier to get traction and scale. But certainly we've seen companies, and in my prior life at McKesson, we've actually acquired a company that grew totally B2C around the wellness space. It's called well.ca in Canada. And they've had tremendous growth and momentum by really focusing on their target audience and really understanding her and tailoring to her needs. It's just a harder scaling journey at times, but I'm just an investor, Casey. I'm curious what you've seen out in the market.
So what I would say is, so we invest early, so we're getting more D2C models. And what I would say is, what's the expression? It's necessary but not sufficient. So what I think you should, like, what we like to do is, if you're going to market quickly, and you're doing that in a D2C, way, do that to demonstrate engagement, retention, show that there's some pathway to outcomes, work out the kinks that basically show that you can deliver value to somebody. It's important, but again, if you want it to scale and get to people who may not have the money out of pocket to pay for whatever the product or service is, then you're going to have to look at some of the institutional channels. So from my perspective, we can de-risk it early on and then pass it, for example, to Pam, like what we did with Origin, right? And then, we've just de-risked it in terms of like, people really want this, and we've worked out the kinks so that there's, adherence and compliance, and like you can actually get the engagement that you need to start to see outcomes moving. And then, down the road, a larger investor comes and then really helps to push it through the more institutional channels to get the scale and the equitable access. So I think, it's never as easy as I just described it, but if you work in tandem and almost look at it like a pathway, then you could get benefits from two very different ways of operating.
Pam, and do you guys have a preference on the model, just given your backers, or no?
No, so there's just lots of good comments in the chat that
There are
getting drawn into. So slight side comment, the Facebook stopping ads on breast illustration. Yes, Origin has struggled with that same thing, and they're actually bringing a group together to fight this and try to make some policy changes with the platforms, because it's really hard to reach people if you can't share what you're working on. So side note. So back to the question, we have been pushing more and looking more at D2C because that's where the experience is really broken and people are still motivated to go out and spend because it's so necessary. So it's a lot of what Casey said. And we think there's lots of interesting things going on in the direct to consumer. And so it's like starting early there, also as Ella said, and then over time can see the opportunity, or maybe it's starting it's direct to consumer, but there's a fee for service component. And then over time we can make it more a value-based arrangement, but you can prove that people want it and the ROI and like the impact it can have.
Yeah, I want to draw some folks to the comments in the comment section, because there's a lot of really helpful information that's being shared around different types of surveys and groups to get involved with, so that ideally direct to consumer advertising can be much more seamless than apparently it is today. I actually want to just focus in outside of the business model and the market that you guys look at. Every investor says that the team is the most important thing that they're going to be investing in. But sometimes it's really hard for an entrepreneur to be able to define what that team looks like. It just has to be a rock star team, but how do you really figure that out? So I'm actually curious from you, Ryan and Ella, as you're evaluating teams, what does the team actually need to look like? What kinds of qualities in the founders or the characteristics of the team do you really look for before you're making that investment?
Ella, want to go first?
I was going to let you go first because my dog was going in the background, but I think he's finally not mad at the FedEx man, so I can start. So again, it depends a little bit on stage. When we do kind of a seed investment versus a Series A, or we bleed into Series B, like I would say, starting with seed, we look a lot at the founders. We recognize the team's not going to be fully built out yet, but it's really important for us. Okay, sorry, looking at the FedEx truck there, hoping my dog doesn't go off. Having a founder that really has a clear vision, that's able to articulate that, sell that, and persuade. We're looking for some relevant experience across the founding team for the key capabilities that are needed to really get the innovation or the company to the next stage, and having a really clear sense of purpose. Depending on their go-to-market, whether that's B2C, we'd look at a little bit more marketing experience. If it's a regulated product, we'd want to make sure that there's some experience within the regulatory framework or a path to get that. We also like teams that can go both kind of deep and wide versus just like spiking in one area. So having kind of a diverse set of experiences and, you know, showcasing grit or resilience, like any experience kind of building and scaling, whether that's a past experience as a founder or past experience in a company doing something like that, is very important for us, just to make sure that, you know, that there's kind of that experience. And of course, commercial and financial acumen, I would say, are kind of given, but very important as well.
Yeah, those are great points, Ella. I'll just add a couple of thoughts. So on the to begin, I think relying a lot on intuition can often be a source of bias. And so we're super mindful of that, and we have to, you know, constantly check in with ourselves and with each other. You know, I really like that founder. Okay, well, why? You know, let's make sure that we're being data driven and mindful of some of the cues that we are taking from the founders that we connect with. I generally don't have a one size kind of fits all rubric. I wish I did, but I think it's generally a mistake to have a one size fits all, because different businesses need different things. If I were to try to boil it down, though, I would say maybe a couple of thoughts. So the first is, I've seen founders succeed when they are just remarkable salespeople, and when they can, I think, zoom into and out of problems quite nicely. So kind of like Ella, what you were saying, deep and wide. You know, when you're a founder, you're constantly selling. You're selling to your investors, obviously. You're selling to talented candidates, often many of whom already have really good jobs and are happy where they are. Good people are happy. where they tend to be. And so pulling them away from those roles to get them to join your company it's sales. You know, you're selling your customers, of course, you're selling your families, sometimes some of whom think you're crazy. So I think, you know, selling's a key thing that I think is really important, particularly at the early stages as you're trying to build conviction around what you're building. And then on the problem solving side of things, you know, as a founder, you need to stay zoomed out and think big picture, think strategically. You're often having big picture conversations, particularly with people not as close to your business, but you need to be able to, I think, also zoom way in because your team regularly relies on you to solve some of their problems. So you need to be able to quickly zoom in, deeply understand an issue that's going on within your company or within your team, and provide the detailed feedback that your team needs in order to succeed. And so I would say those two elements I try to look for, right? Evangelical, amazing sales, and the ability, like the comfort with detail and the comfort with zooming in.
Awesome. So I think we have, on that note, I think that's inspirational enough for the entrepreneurs on the line to be able to really start to think about their teams. But at the same time, I think you've all given everyone a lot of food for thought in terms of business models and the types of opportunities that exist in women's health and femtech. So with that, thank you all very much for your thoughts, and I'll pass it back to Susan.
Thank you. Thank you, Polina, Pam, Ella, Casey, and Ryan. I had huge hopes for this panel, and you exceeded every expectation. You were so amazing, and I'm so grateful to have each of you in our world. Very honest conversation. I believe it's one that will be watched a lot in the recordings and very helpful to this entire community. So thank you so much.